Welcome to this explainer. Look, we're diving straight into something pretty phenomenal today. We are unpacking how an Indian conglomerate is just quietly thriving in high-end manufacturing and luxury retail, and they're doing it despite some seriously massive global macroeconomic headwinds. We are talking about KDDL Limited's FY26 performance. So, whether you're into precision engineering, keeping tabs on shifting global supply chains, or you're just fascinated by the booming Indian luxury market, there is an absolute masterclass in strategy hidden inside their latest earnings call. Let's get into it.
This quote right here from KDDL's chairman, Yasho Sabu, really perfectly sets the stage for us. Basically, their guiding philosophy is this: do not overhype it, just overdeliver. Be cautious in promises, but aggressive in performance. And as we're going to see, they have absolutely delivered way beyond expectations across their entire business ecosystem.
So, here's our game plan for this explainer. We're going to hit 6 key areas. We'll start with defying global market headwinds, then move on to mastering watch components, precision engineering beyond watches, Ethos, which is their retail juggernaut, reviving the Favle Luba brand, and we'll wrap it all up with the FY26 financial scorecard.
All right, starting off with Section 1, defying global market headwinds and navigating those tricky macro challenges.
So the immediate paradox we have to tackle is this: how on earth do you manage to grow your luxury components and retail businesses when the global luxury market is, well, frankly, struggling? In traditional global hotspots, think China and parts of Europe, brands are facing weak consumer demand and they're being super cautious with their inventory. But KDDL, they're capitalizing on a completely different reality. They're looking at a booming Indian ecosystem, rising premiumization right at home, and crucially, global customers who are actively desperate to diversify their supply chains. They want reliable, consistent quality outside of the traditional legacy suppliers. And KDDL is stepping right into that massive gap.
Moving right along to Section 2, Mastering the Watch Components, literally building the gears of luxury.
Now, let's zoom in on the really microscopic side of the business. What's absolutely wild here is how KDDL is aggressively targeting new geographies totally outside the traditional Swiss borders to lock in their long-term growth. Don't get me wrong, Switzerland is still obviously the biggest player in terms of value, but look at this expansion strategy. Germany and France are seeing a real revival. Watchmaking is coming back to the UK, which, fun fact, is actually the historical birthplace of the craft. The US is having a resurgence with legacy brands, and KDDL is even actively pushing into Japan, a country with an incredible, world-renowned watch legacy of its own. By spreading out their customer base globally like this, they effectively bulletproof themselves against regional downturns.
Within those components, we really need to talk about their bracelet division. It's fascinating because metal bracelets aren't bound by those super strict Swiss-made criteria that totally govern watch movements. And because of that loophole, KDDL is doubling down hard. They are expanding capacity from about 75,000 units all the way up to an estimated 120,000. And management was very clear on this. While factories in China might pump out massive volumes, KDDL's game plan is to compete with the absolute best in the world on high quality and value. They are not interested in a race to the bottom on price. If you watch global supply chains, this is basically a masterclass in finding and dominating high-margin niches. I mean, they are targeting a massive 25% compound annual growth rate just in this division alone.
All right, let's pivot a bit. Section 3, precision engineering beyond watches. Let's look at the Eigen division.
This is where their strategy gets really cool. KDDL's approach beyond watches is beautifully simple. They say, we are selling a capability, not just a product. Management actually stressed that it totally doesn't matter if a client needs a massive bus bar or some tiny 2-PASA component. Their real product is extreme precision manufacturing. This totally agnostic mindset means they can just take their world-class engineering skills and pivot them wherever global demand happens to be running the hottest.
And by leveraging that very capability, they are just riding the wave of some of the most robust, high-growth sectors on the planet right now. We are talking electric vehicles, energy storage, aerospace, and consumer electronics. Management actually used this great analogy. They said looking at these sectors is literally like standing at the beach and looking at an ocean of opportunities. The potential is just vast. So KDL is strategically zooming in on EV, energy storage, and electronics. Why? Because their market share there is currently tiny, which means the headroom for explosive growth is absolutely massive.
So how did they pull off an incredible 35% revenue growth in this division last year? Well, they nailed 3 very focused steps. 1, they deepened their existing relationships. 2, they relentlessly added new global customers. And 3, this is the big one, backward integration. For example, they brought the whole electroplating process entirely in-house. That lets them tightly control the quality, the consistency, and crucially gives them the power to seamlessly ramp up production volumes on demand.
Okay, Section 4, Ethos, the retail juggernaut.
Time to conquer the consumer market.
So, pivoting away from the gritty, super technical factory floor, we enter the highly glamorous world of the consumer with KDDL's retail juggernaut, Ethos. Get this, Ethos just crossed a massive milestone of 100 luxury boutiques across India. But they are definitely not stopping to pop champagne just yet. Their sole focus is aggressive acceleration. Management actually announced they plan to double that entire network in just the next 3 years. No way, right? 3 years. They're confidently pushing into Tier 2 and Tier 3 cities too. They figure, sure, these markets might take a bit longer to ramp up, but the operating costs are way lower and the consumer appetite is absolutely there and waiting.
This whole expansion is driven by a seriously ambitious vision. Pranav Sabu, the CEO of Ethos, literally said, "Our goal of growing 10x in 10 years. I think we are ahead of that vision." Now, let's think about the math for a second. Hitting a 10x revenue goal in a decade, that requires nearly a 26% compound annual growth rate every single year. And they are delivering on that through good times and bad. They're backing it up with heavy investments in merchandising teams, tighter supply chains, and get this, they're even using an internal AI lab to optimize their ordering and slash their inventory's days. Pretty smart, right?
Now this next move might honestly be one of their most fascinating strategic shifts. Ethos is rolling out a totally new retail format, specifically targeting the 25,000 to 2 lakh rupees segment. You might be wondering, why now? Well, because management firmly believes the existential threat from smart wearables like the Apple Watch is officially over. It turns out, people eventually just want a beautifully crafted mechanical piece of gear on their wrist, not just another stressful screen pinging them with notifications. So having weathered that whole smartwatch storm, they see a massive opportunity, and they're aggressively diving back into this premium but accessible market space.
Up next, Section 5, Reviving the Favluba brand, a legacy reborn. So KDDL has effectively brought this historic Swiss legacy brand back to life. And Favluba is already making waves in over 20 countries with more than 80 points of sale. The market response has been so incredibly strong that retailers are literally running short on stock, which, let's be honest, is a fantastic problem to have. And while KDDL is being really careful about ramping up production to make sure they maintain that ultra-high quality, they're already projecting to more than double their total sales in the FY27 financial year. It's a huge comeback story. Finally, Section 6, the FY26 Financial Scorecard. Let's look at this record-breaking growth.
All right, let's put all these moving parts back together and look at the hard financial proof. Hard numbers time. Right here, we see the raw power of their standalone manufacturing units. Remember, this is happening in a globally depressed luxury market, yet the watch components division grew from 200 to 240 crores. And that precision engineering Eigen division, it leaped from 147 crores to a really impressive 200 crores in just a single year. That perfectly reflects that massive 35% growth we were geeking out over earlier.
But they're definitely not just resting on their laurels here. They're actively pumping approximately 50 crores of capital directly back into the standalone business. The lion's share of that capex is aimed squarely at those high-growth manufacturing segments we talked about. They're scaling up the precision engineering, backward integration, they're pushing the bracelet capacity forward, and they're driving some serious improvements in their packaging division.
And then, when you zoom out and consolidate the whole shebang, the precision components, the sheer engineering prowess, the retail giant that is Ethos, and their brand holdings, KDDL generated a staggering 2,270.8 crores in revenue for FY26. Just let that number sink in. That is a massive 30% jump from the previous year, with EBITDA margins hitting historical highs. So as we wrap up this explainer, I want to leave you with a final thought to really ponder. We've seen exactly how KDL is just aggressively snatching up market share in precision components globally, right? And we've seen how their retail arm is absolutely dominating the Indian luxury consumer market. So with global brands now desperately trying to diversify their supply chains away from old legacy dependencies and the Indian luxury retail sector booming like crazy, is the traditional Swiss-made monopoly on high-end watchmaking finally fracturing? I mean, how are global manufacturing power dynamics going to shift over the next decade as companies like KDL continue to rise? It's a completely fascinating trend to watch, and you can bet we'll keep breaking it down for you. Thanks for hanging out with me on this explainer, and keep learning.